Welcome back to QAV, Tony. This is episode 807. We're recording on the 18th of February. Happy Valentine's Day for last week, Tony.
Oh, thank you, Cam.
RBA due to meet today, Tony. What's your call on what they're going to do? Seeing as we
Well,
know they're terrified of you, they avoid you in public places when they run into you.
well, the last RBA governor did, and
Mm.
I read in the paper today that the current one dresses in old clothes and puts a cap on when they go out in public, so they're not hassled. So
Wow.
it must have been part of the handover from the last guy to the new lady.
The disguise, the RBA
Yeah,
governor disguise. They've got like a wardrobe in the chairperson's
fake
office, the governor's
fake
office.
mustache.
Yeah, fake
Yeah,
mustaches. Yeah, yeah. Fake noses. Yeah.
yeah, yeah. Well, look, we'll know in about 5 minutes, I think, um, what the result is. But I think they're going to cut. And the bond market thinks they're going to cut, although there's been a lot of people saying it's 50-50, which I would subscribe to based on the numbers because inflation's now back in the desired range, but unemployment is still quite low. So they generally don't cut unless inflation is above the range and unemployment is struggling. Uh, so I think on the numbers they would normally wait, but if they wait, they're going to be caught up in the election, the federal election, which is has to be held before sometime in May. And I very clearly remember back when John Howard lost the 2007 election, there was a rate rise during that election campaign, and the RBA was roundly criticised for doing something which was seen to favour one side over the other, to be a criticism of the economic management of the coalition. So they haven't ever done a movement one way or the other during an election since then. The problem they're having now is that the federal election hasn't been called. It's likely that if inflation keeps following its trend, it's going to be at the bottom of the range or even below it in the coming months. And then their kind of hands are tied. They can't cut during the election cycle. So I think I think their logic's going to be if we think we need to cut in the next, say, 3 months, then we should cut now to avoid any political destabilization. Because if they wait for 3 months and then cut, then they'll be accused of not doing anything, which is a kind of political act in itself. Um, yeah, so I don't think they want to dance to that tune. I think they'll cut today, even though it probably isn't greatly needed. At least it takes them out of the election cycle and any sort of accusation of bias.
And why do I care? How does it affect me either way if they cut or they don't cut?
Oh, you're one of the lucky or unlucky Australians who doesn't have a mortgage, so it doesn't affect you at all. Well, it does indirectly. I mean, your credit card bill will go down, or it should. Um,
Don't have a credit card bill.
oh, there you go. And interest rates should start to reduce costs in all sorts of ways. The
I meant
businesses you deal
purely,
with should be able to cut their prices. The utilities you deal with should be able to cut their prices if it flows through quickly. But it's
I
probably
meant
only going
from
to be
it.
like a 25 basis point cut, so it's almost symbolic, really. It won't have a big effect on the economy one way or the other, I don't think.
Right. I meant specifically from a QAV investing perspective. Does it make any difference? The market's been going down today, I see, and yesterday it was down as well. So, do you think the market will go up if the interest rates are cut, or is they already
Well,
factored it in?
yeah, well, like I said, I think the bond market's 85% sure it's going to be a cut, so the market probably has factored it in. I would have thought over time the market would go up. It may not, it might jump a little bit straight away, might reverse the losses from today. I think the losses in the last couple of days have been on the back of some of the bank reports, which are a large part of the index. And they've been suggesting their margins have been eroded over the last 6 months.
They just announced, Tony, 3 minutes ago, as we were talking, they've cut it to 4.1% as expected.
There you go.
Hmm.
Yeah. And what's the market done? Well, we don't know. We get a 20-minute delay on the market,
We've
I
got a
guess.
lag. Yeah.
Yeah.
Hmm.
Well, there you go. That's, mark this in the calendar as prediction one right for me in the last 5 years.
Let's see what the Fin says. Why it matters. The central bank raised borrowing costs 13 times since 2022, but has since held the cash rate at 4.35% for over a year as it waited for inflation to tick back towards its 2% to 3% target. There was a lot of money riding on the decision, with the market pricing in a 91% chance of a rate cut. What's next? RBA Governor Michelle Bullock will hold a media conference at 3:30 p.m. out of her usual disguise, which is expected to provide more insights into the board's decision making.
Turn up like dressed as the Ronald McDonald, the hamburger or something like that. Well, I think the follow-on is expecting the federal election to be called now for the middle of April, will be my next
Right.
prediction.
Before we go to the pulled pork, I just wanted to do a quick portfolio update too, because I haven't done one for a while.
Mm,
The dummy portfolio for this financial year is up around about 16%, 15.76% to be specific, versus the STW up about 12%. So they're both doing well, good years.
yeah,
We're a little bit better. Um, Stockopedia US portfolio for people that are interested in that. Looking at the all-time result, which is September 23, it's up about 83% versus the S&P 500 up about 37%. So still doing well. If I look at the 1 year chart on that, we're up about 73% versus 22% for the S&P 500. So by all metrics, except the last 3 months, we're down 3% versus the S&P up 4, but we had a very dramatic climb before that. We're up over 100%, if you recall, back
yeah,
around November. So it's come back a little bit. But yes, that's doing well. And I'm not tracking the SOP Australian one anymore, but all the portfolios are doing well. I think my super portfolio is up about 10% for the financial year so far. A little bit behind the benchmark, but doing okay.
very good.
All
Good
right.
to know.
You want to get
As
into
Paul
your.
Keating used to say, a pleasing set of numbers.
Oh, thank you, Paul. Do you want to get into your Fonterra pull pork?
I do. And this is going to sound strange to people. I researched Fonterra, which is a small ADT stock, so it's not going to suit everyone. But in the kind of digging down into the weeds and the minutiae, I came across an announcement saying that they're about to delist from the ASX. So
Oh,
I will go through and do the pulled pork. Reason number one is I haven't had time to find another company to do it on because I didn't come across that announcement straight away. Reason number two is it's been on the buy list for a while, so there possibly are people who are shareholders. And within a couple of days, I think it's the 25th of February, it's about a week, 26th of February, they have to, no, 25th of February, they have to decide whether they're going to move across to the NZX because the Fonterra shareholders fund will still continue, but it's currently dual listed. And most of the shareholders are in New Zealand. And so the fund wants to stop paying ASX fees and migrate across to New Zealand. So if you
mm.
are a shareholder and you're not aware of that, you've got to decide what to do. If it were me, again, not personal advice, I keep it simple and sell the shares and invest in something else. But it has a good track record. It's been doing well of late. And some people might have capital gains tax issues if they sold or might want to hold on. Then if you do nothing within a week to 10 days, you're going to be listed on the NZX, and that'll have some other issues for you, not the least of which will be currency risk that you'll have to think about for your investments. But anyway, um, I will go through it. Interesting company. So it's a small ADT stock, $54,000 traded on the ASX, a lot more than that traded on the New Zealand Stock Exchange. So there are some benefits to going back to New Zealand. 54,000 K will only suit small portfolios for QAV listeners here, sort of around the 150 to $200,000 mark, I would have thought. But when it goes to the New Zealand Stock Exchange, I didn't pull out what their ADT is, but given the ratio of ASX shareholders to NZ shareholders, I think it'll be a lot larger than that. So people might want to take advantage of that. So it's an interesting situation. Fonterra is the dairy co-op in New Zealand. It's one of the largest ones in the world, and it's the largest, I'll call it, largest listed business in New Zealand, if not the largest business, full stop. Although the listing in New Zealand's a bit strange, and it's when I say it's strange, it's basically listed to enable the farmers who, if they want to sell milk to the co-op, they have to buy shares in the co-op, and it facilitates that sort of transaction process by listing on the NZ Stock Exchange. I'm not sure what the mechanism is, but as an outside investor, I don't think you can buy shares in the Fonterra company itself, in the co-op itself. So it's basically allowing farmer to farmer transactions and allowing new farmers who want to sell their milk to Fonterra to be able to get the shares to do that. Over the course of its history, Fonterra realised that other people might like to invest in the business because it's more than just buying the milk from farmers and pooling it and selling it for the best price. It's now a whole range of brands, including ones in Australia. And so they set up the Fonterra Shareholders Fund, which is it's actually a trust. It's the company I'm talking about today, although it's really a trust. And it allows people who aren't farmers to buy a unit in the trust and have the trust own a share in Fonterra, the parent co-op company. And so basically it entitles you to dividends from the company and I guess any other sort of capital returns that the company does from time to time. So the numbers are a bit screwy if you look at them from a QAV point of view, because the company has a Fonterra Shareholders Fund doesn't make any money. Fonterra, the company or co-op, does. The shareholder fund doesn't have a PE, it doesn't have an EPS. It does have operating cash flow, which equates to the dividends it receives from Fonterra. So that's why it's popping up on our radar, because it's got a prop CAF. A little bit of background. Fonterra, it's it's responsible for 30% approximately of the world's dairy exports, and with revenues
Whoa.
exceeding New Zealand 22 billion, it's New Zealand's largest company according to Wikipedia. So it's quite large. And I know from my time in New Zealand, the way it used to work, and this is going back sort of 12, 15 years now, Fonterra would come out, I think, I'm going to say quarterly, but it could have been 6 monthly or periodically, and they would announce the price that they were paying for milk. And that was a hotly anticipated number, and it could tip the New Zealand economy one way or the other. If the number was higher than what it was expected or lower than what was expected, it could have repercussions all the way through the New Zealand economy, because dairy farming is such a big part of the New Zealand economy. Let's see. Another thing to highlight, and this came from the New Zealand Shareholders Association, is that the Fonterra Shareholders Fund is a fund that only owns shares in Fonterra Cooperative Group, but there are 107.4 million units of FCF, but a total of 1.609 million FCG shares. So 107 million outsider shares and 1.6 billion shares, farmer shares in Fonterra. So There is a conflict of interest, and the New Zealand Shareholders Association raises this. Suppliers, i.e., the farmers, would rather receive a higher price for their milk, but a higher price means a higher cost of sales to Fonterra and subsequently a lower profit, and thus earnings for shareholders and the shareholders' fund goes down. So there's a conflict of interest here, and it's always been a dicey one that co-ops have to manage is how much do they give back to the members versus how much do they keep as profit to fund their own expansion. What else can I say about Fonterra? Yeah, that's probably it. I've covered most of the rest of the quotes I've got there about how it works. Getting on to the delisting. So this was announced on the 15th of January 2025. Fonterra Shareholders Fund has obtained approval from the official list of the ASX to have it removed. And the timing for the removal is Wednesday, the 26th of February. Sorry, Tuesday, the 25th of February. FSF units will suspend from trading on the ASX at the close of trading. Wednesday, the 26th to Thursday, the 27th, the quotation of FSF units is suspended on the ASX. There's no ASX trading. All ASX trades are settled with their 2-day settlement, and the units are then transferred to the NZX. And on Thursday, the 27th of February, FSF is removed from the official list of the ASX at the close of trading. Excuse me. So, where are we now? It does talk about in the release that they're going to transfer any remaining ASX unit holders across to the trust listed in New Zealand. One thing I didn't mention was that, this is another thing which I picked up from my research, which was interesting, and again, not highly promoted on the website, was that what is promoted well on the websites is the portfolio of Fonterra brands includes Western Star, Perfect Italiano cheese, Bega cheese, and mainland cheese. And they also have some food service businesses supplying to commercial food processors, one called Anchor Foods and an ingredients business called NZMP. However, on the 11th of November 2024, Fonterra announced that they were going to sell most of their consumer businesses and that they were going to focus on the milk business. So they've long trumpeted their ownership in these food brands, and now they're putting them up for sale. So not only is Fonterra retreating, or the FSF retreating back to the NZ market, but Fonterra, the co-op itself, is also retreating back to its core business of buying milk and selling it as a pooled entity. And I think they're also keeping their commercial businesses, Anchor Foods and NZMP. So a lot of moving parts going on, a lot of announcements going on, which aren't, in my opinion, weren't very highly flagged. You had to go right down into the detail of the ASX announcements to find out about it. What I next looked at was the earnings. So FY24 earnings were solid compared to longer term trends, but down on last year. So last year was a bumper year. Part of that was due to the sale of some of their businesses in Brazil and China. Like for like sales were down 7% and the EBIT was down 11%. NPAT's pretty hard to compare because it was inflated last year by the asset sales. However, even though FY23 is slightly down FY24, sorry, 24 is down FY23, FY23 was way above the medium-term trend. So FY22 was a lot lower than FY23. So even though I think I've read one of the analyst reports and they pointed out that even though numbers were down this year, it's still head and shoulders above what it has been in the past. So they weren't overly concerned with that. In terms of the QAV numbers, the share price I used was $4.50. I think it's a little bit higher than that today. So even though it's going to be delisted on the ASX, I guess it's being supported by the co-op pricing in New Zealand. There's no consensus target, so I can't see how $4.50 compares. was high, was a little bit higher than TK1, IV1, sorry. The yield is very good, and this is a shareholder fund which is getting dividends from the co-op, so dividends are important. Yield is high at 9.5%, so it scores for us on that metric. Stock Doctor can't give it a financial health score or trend, so we can't score it on that metric. And I believe it's because we're not seeing any profit in the company in terms of earnings per share. Um, Stockopedia is in a similar boat, so its quality ranking is 38, which is very low, and the overall ranking is 80, which is also reasonably low. Um, so Stockopedia give it a very low ranking, a very low F score, again because of this lack of profit. Uh, However, the Stockopedia ranking for the Fonterra co-op itself, which is NZX code FCG, is 96, which is quite high, with a quality rank of 84. So the underlying business throwing off the dividends, which fund the income into SFS, is scoring well in Stockopedia. So I'm reasonably satisfied with the quality of the shareholder fund. Prop cap is strong at 4.76 times. Can't give you a, a lens on the PE because we don't have one. NTA, this is trading at less than book plus 30 at $4.65. And the NTA is 355, which is also less than book plus 30. So it's we're buying it for less than net assets. Um, the shareholder fund hasn't consistently increasing its earnings, so we can't score it for that. We talked before about whether it has a recently upturned 3-point trend line sentiment, and I thought it hadn't, but as Cam pointed out, the results for this company come out in July, so it just sneaks in as a recent 3-point upturn since its last results. It doesn't have an owner founder because it's basically a trust fund set up to allow other investors into the Fonterra co-op. So we can't score it for that. Overall, the quality score is 63.6% and the QAV score is 0.13. So not at the high end of the buy list. It's been on there for a long time, so I thought I'd still cover it. But the highlight for me is people are going to have to decide in the next week whether they sell or whether they remain and get transferred to the New Zealand Stock Exchange.
I just looked on the my spreadsheet and I have it flagged as delisting, so it must have come
Ah,
up at some point
okay, good.
in the past. Somebody must have flagged it. But yeah, we don't hold on to it. But good heads up if anyone out there listening holds on to Fonterra and you haven't done something about it yet, you might want to get onto that. So you said they have 30% of the world's dairy export
Yeah,
market? That's
I
insane
was
for a
really
company out
surprised
of
at
New
that.
Zealand.
It's amazing, isn't it? Yeah.
Yeah.
Yeah, and that was from Wikipedia. And I saw somewhere else that they were the biggest dairy co-op in the Southern Hemisphere, and I think either top five or top six in the world. So yeah, they're quite large.
Wow.
Mm.
Thank you, Tony.